Hello, everybody, and welcome back to the Dash Trader Newsroom. The bear is back on Wall Street, but is the bear here to stay, or is this transitory? My name is Michael DeJoy. I'm the Director of Educational Services and a licensed professional here at Dash Trader, and I'm joined today by Diego Galvis from Trading College. We met at the NASDAQ market site during an educational event last year. Tell me a little bit about Trading College. I know you guys are looking to participate in the upcoming #1 Best Trader competition.
That's true, Mike. Thank you for having me here. It's a real pleasure for us to share with the top of the industry and the community. Yeah, we are Trading College, the largest academy here in Colombia and one of the most important in Latin America. And we are starting to connect our community with the fund in the markets, in the industry. That's why we want to compete on the One Best Trader competition. And this year we'll be here with a good part of our traders for sure.
That's fantastic, and I'm really looking forward to get an international perspective on what's going on in the market today from a seasoned professional such as yourself. So far the day's not even done yet. We're coming to the end of the day, and the Dow has already tumbled over 600 points, far worse on the Dow than on the NASDAQ. But that's because of the U.S. Treasury yields have continued to move higher. What do higher yields mean to the markets from your perspective? Or is this a technical sell-off?
I think it's very, very, very fundamental from my point of view. We receive disappointing bond auction that turned to the market in a clear sell-off. The question here, Mike, for me is if this volatility is here to stay. From my point of view, I think it will stay for a couple of months after all the thing we have with the tariffs. Now we have the problems that may have the American government to make the tax bill, so they can this tax cut to the companies, to the people, so they can in somehow inject more dynamics to the economy and to the markets. But it depends of the ability of the Trump government to convince the lawmakers. So I think it's very similar to any country in the world, but for you guys, it's more important to the war.
Yes, absolutely.
Yeah, I think this happens in every country every year or every new government. But we make a lot of say no. It's very important for us because our portfolios are all in U.S. markets.
Yes. So even in Colombia, everybody's trading the U.S. market.
Yeah, that's something.
Yeah, there's a lot of I mean, the Colombian markets are vastly illiquid compared to U.S. markets, and of course, whatever happens in the United States has an impact around the globe. In the United States,
and even from the point of view of business, for example, not for me, but for the industry here, if the volatility continue in USA, investor will start to look for another market, emerging market or more stable. I was taking a look of the Australian composite and start to gain more volume, more volume the last weeks, and could be interesting if the thing doesn't turn off better for the USA markets.
Gotcha. That's a very interesting perspective. Here in the United States, real estate markets have started to feel the pressure as well, as new home sales have started to slow. I mean, that makes sense with bond yields going higher. That means that the average mortgage now is above 7%, which is making it more expensive for people to buy new homes. And usually if there's any kind of economic pullback, it usually starts in bonds and then spreads to real estate and then finally affects the stock markets, which as of right now, we are still near all-time highs. But we have hit some major technical resistance. And of course, we saw that Bitcoin and Ethereum, both, Bitcoin hit an all-time high today and then quickly backed off. And as you were saying, investors are looking for places to to get returns, and some obviously were in the crypto markets, and obviously you were looking into Australia as well. But from my perspective, it seems like the markets have established a range, and I brought up this chart, of the DIA, which is the Dow Jones Industrial Average. It's the ETF that represents the Dow Jones. And what we see here is that we put in a lower high. This is the first time that the Nasdaq is kind of an equal high, a sideways trend, whereas this is potentially putting in a lower high, which would technically mean that we would go to a lower low. Now, it's very far off, doesn't mean it has to do that. But what does it mean technically for you? I mean, what are you seeing between the Nasdaq and the Dow Jones?
I agree with you, Michael, in this part, for the index. But for example, on Nasdaq or SP 500, you can find them closer to their all-time highs. I mean, about
Yes.
3 or 4%. I may be more optimistic there that here. At here, I can agree with you with the lower high, and maybe they can settle a range and here. But on the Nasdaq and SP 500, I think with, for example, a good earnings season or the good news on the tax bill, will be easily retake the all-time highs.
Oh, so basically, you're looking for a breakout to new highs on the Nasdaq and the S&P.
Very political, very fundamental at that moment. But also, for example, the retail cut perspective.
Yes.
Also, for example, Target, Walmart, Home
We had
Depot.
bad numbers from Target today. Target says don't expect.
And so today was a really bad day because the news of the auction bonds, the cut on the perspective for the retailers, how these companies will take the tariffs. They will project it to the clients or they will take it. They have Walmart or Home Depot. In the short term, for example, the Home Depot may be more helpful for the economy and for the market, but on the medium term will hit the earnings on July. Will be,
yes.
I'm not very optimistic for the earnings on Home Depot more than the Walmart. So it's very, very interesting to watch the markets, analyze them. And right
You're
now,
100%. Walmart got slammed. We're going to take a look at that when we get to the charts in a few moments. We'll take a look at Target and we'll take a look at Walmart. Excellent. So let's jump in here. So you mentioned the one big bill, or as Trump says it, the one big beautiful bill. A lot of B's in that. Will the one big beautiful bill have a negative or positive impact on the markets? I mean, there's a lot of tax cuts. There's still deficit spending, which is not going away, even though there has been a little bit of a belt tightening on the U.S. federal spending. But what's really going on here? What do you think the impact of the one big beautiful bill is going to be?
I think will be positive. I mean, like Liberation Day, but but plus 10 times more. Because once they gave the bill, the tax bill, will be a real liberation, because the tariffs was more like diplomatic discussion.
Yes.
Much more easy to solve, because it was more like,
government to government. It was a negotiation.
Exactly, that's the word, negotiation. And even it presents against, it have a easy solution and fast solution. But this tax bill is much more complicated. But also, it's much more complicated, the solution and the impact on the positive solution is much more bigger.
Yeah.
I mean, it's higher. It will be very good, and it will be a high victory for the government, and will be impulse the markets really hard. I mean,
yes.
At this point of the year, at this moment, we are all expecting for this big beautiful bill.
Yeah, so I mean, I'm going back to the Dow Jones Industrial Average represented by the DIA here, and I mean, I think that we could. I mean, if if you're correct, the one big beautiful bill could, this might not be a reversal on a lower high. It might take us back up to the prior high, and it could potentially break out the NASDAQ and the S&P. As we saw on the NASDAQ on the first chart, and we're going to go to the market charts in a minute, we're not quite at the prior high, but we're getting close to it.
Yep. Yeah,
So we did have a little bit of bad news, but that bad news will be trumped. I can't, for lack of a better word, would be trumped by the passing of that one big beautiful bill that's moving its way through Congress right now. So, very good point. Let's jump to the charts. But here we go. So we did get a quite a sell off on the DIA, but we have not broken the low established 3 days ago. On the NASDAQ QQQ, which represents the NASDAQ 100, we are still above the 10 and the 20 period moving average, which is bullish. It's still bullish. SPY. SPY has again pulled to the rising 10 period moving average. It is a lower high currently, but is also potentially still bullish. We are very extended. We have made a tremendous run up over the last really 3 weeks since the
since from the technical point of view is also a relief today for the markets.
Yeah, it's a break. It's a breath of air.
Yes, exactly. It's a good moment to take a break, to consider everything, and maybe take another positions or be, But it's good. I mean, and the synchronization, let's say, between the technical and the fundamentals events sometimes it's good, and not even not all the times coincidence, but this time is probably.
Yep, and this is so I brought up Tesla, which is one of the Magnificent Seven. So Tesla was really down in the dumps in around 220, and it made a incredible run up to 350. Everybody was waiting on comments from Elon Musk, etc. And today we're seeing it pull back, and like you said, this might just be a pause that refreshes rather than a reversal. So let's take a look at NVIDIA or NVIDIA. Also had made a tremendous run back to the upside, came into some resistance, and it's kind of pulling back. But again, above the 10 and the 20, this is still bullish price action. MSFT, Microsoft had a bit of an announcement. There's some, new Luma virus that's infecting many computers. But I mean, look, Microsoft is back at its all-time highs after great earnings and a big gap up.
It's really close. I mean,
yep. So let's take a look at Apple. Not so hot. Apple might be a little rotten. Not showing relative strength compared to the others. What else do we got? We got Netflix, NFLX, which has basically just been on fire. Netflix has not even batted an eye. It's just up and away as far as Netflix goes. Now let's take a look at Walmart, WMT. Yeah, I mean, Walmart made a good recovery, but it's kind of got a high and a lower high. It's actually below its moving averages. I'm just going to zoom in here a little bit with my dash charts. There's a crossover going over on the moving averages, and I got my little red down arrow. Which is telling me that we have crossed the 10 period moving average on retail. The main retailer in America, Walmart, has crossed over and is heading to the downside. TGT, Target, also below its moving averages. I mean, that is not a healthy looking chart. Your thoughts?
Yeah, I agree with you in the case of Walmart. I think they will take a moment there after the announcement of or hiking the prices for taking the tariffs or translating the tariffs to the clients will be helpful for the price.
Yeah, you're 100% right. So the impact in a company like Walmart or Costco? Let's see, Costco. Let's see what
But
Costco looks like.
in the long term, I think Walmart will be. I mean, they are, from my point of view, they are taking better decision, because it's what you have to do. You can take these losses of these operative losses uh, on the tariff on your company, because on the company will disappear.
Yep.
And somehow
they got to pass the cost through.
Exactly, because if you translate, if you send the tariffs to the clients, to the people, but at some moment the government will give you tax cuts on some benefits, you can do it like that, yeah, and will be better.
You can balance it out a little bit.
Yeah, so I think from my point of view, Walmart is doing okay. Is doing okay, and the chart.
They're gonna reorder their supply chain to just get U.S. local producers instead of buying stuff from China. So I mean, it's just going to be a readjustment. It's going to take time. You know, from my perspective, you know, the tariffs and what was negotiated with China, 30% increase, 30% can be passed along, but it'll keep shelves full of goods. Yes, they will be more expensive, but it'll give time for the manufacturers to move back to the United States, which ultimately will be very good for the U.S. economy.
Yeah, at the end, very stressful in the short term.
Yes,
for sure, is the best for the country, for the economy, for the people, for each sector. For example, will be very good. I mean, I can see all the logic behind the politics, and it's correct. And in the short term, as we told, it's stressful. And
it's going to be a little painful in the short term for sure.
Exactly. So we need to be very tactical in which companies or in which sectors or which economies we will put our money, our portfolios, or our speculative trading. But this
absolutely. That's why it's good to be traders. That's why it's good to be traders. We can take advantage of these things. Fantastic.
And it's a good time to be trader, because you can see now a market with very vertical movement. It's good.
Absolutely. Let's wrap this up. So your trading college is going to be participating in our upcoming #1 best trader competition this October. So stay tuned for that. But thank you very much for joining me today, Diego. Stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Trader Newsroom reminders. Follow us on social media, on LinkedIn, Twitter, Facebook, and Instagram. And Diego, I look forward to having you as a guest during the #1 best trader competition to see how you and your traders are faring in that very exciting competition. And I look forward to seeing you again, either here in New York or down in Colombia.
Thank you here or there. We'll see soon.
All right.
And we'll be participating with all our community of traders.
Fantastic. Thank you for joining me today. Goodbye, everybody. Trade well.
Bye-bye.